Good morning, everybody. Welcome to the Flow Show. It is Tuesday, the 14th of October, and we're all raring to go once again. A few moves happening in markets, got a few breakouts and other stuff going on. Lots to talk about today. Morning, Kay. Welcome back.
Morning, mate. Now I'm back, but maybe things will all settle and calm down again. It's been a few sessions, eh?
It certainly has, particularly last Friday. Everyone made half a foot out the door, and Trump decided to drop his truth bombs. But we're still feeling the reverberations from that. So let's get stuck into it. Actually, before I do that, don't forget, if you want to sign up, find out what's going on at ForexAnalytix. We're getting closer and closer to a launch point. Stick your name and your email in there, join the waiting list. You will be one of the first to gain access to ForexAnalytix when we launch. We're probably going to have 3 stages, moving all our subs over. Then we'll have all the guys and girls on our newsletter, and then we'll go for a public or wider public release. So if you want first dibs, get your name on that list. If you've already signed up prior months, don't worry, you're already on it, and you'll automatically enter into the draw for this month's prizes, which is a 25k TFP account, and also 60 and 30 days access to ForexAnalytix as it is right now. So get your name on that list. Right, cracking on. Politics still rules the roost in pretty much all that's going on at the moment. So we'll start off in Japan. We did have Finance Minister Kato out talking of his same old language about FX, saying we're seeing recent one-sided and rapid moves, important for currency to move stably, reflecting fundamentals, blah, 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 blah. We're still looking, intervention-wise, we're still looking at the volatility aspect. I'm keeping an eye on the trade-weighted index that they look at as well. That's ticked up to 78.05 today. That's still pretty okay. No real volatility in that number as well. So it's really just about the volatility in dollar yen and yen itself, which has calmed down a little bit. So that intervention is probably on the back burner for now. But we do have politics, and it's looking increasingly likely that the other parties to the LDP are trying to cobble something together that won't involve the LDP. They're all having meetings. We've had the DPP head, Tamaki, saying that he's seeking a cross-party inflation plan by year end, and he's going to hold Secretary General meetings with the LDP, the CDP and Ishin. He says a CDP, DPP, Ishin coalition would still fall short of a majority. Japan's CDP's Azumi says the policy gap between the CDP and DPP is not that big. He says he also wants to work with Komeito too further down the line. LDP's Suzuki has apparently told the DPP that they want to work with them. Now, it's looking, as I say, it's looking like we're coming to a point where the other parties are trying to form a coalition of some sort, which means that after donkey's years, the LDP could be out of the front line of government, which would be the first time, well, in a long, long time. Now, they have been losing support over recent years, so they have been circling the drain, but this could be a big shift in Japanese politics. The key to all of this looks to be the Komeito party. They seem to hold now all the cards as to whether they want to go with the LDP and drag some others with them, or whether they step into this other coalition with all these other parties. So Takaichi of the LDP, it's still not certain she will actually become PM. And we still don't know when we're getting this meeting, although apparently the LDP has proposed October the 21st for the extraordinary Diet session. It's all a big jumble. We're trying to work out what that means for the yen. If the LDP gets booted off the roster, shall we say? Is that going to mean the market buys yen on the fact that Takaichi and her bazookas are off the table, or is it going to react to the fact that the LDP are out of government? Is it going to react the other way, that parties are still going to want to pass fiscal measures, or that there's going to be political uncertainty? It's a whole big mess. I think most paths that we look at lead to weakness in the yen more than strength, but who knows what the knee jerks are going to be. So it's all up in the air at the moment. Kay, I'm assuming you're somewhat up to speed with it.
Yeah,
trying to make sense like the rest of us.
I've been trying to. It wasn't very clear either. So basically what happens is that apart from if we would get or new Komeito decides to side with the LDP after all, and they get some of the independents with them, they could actually continue, but assuming that the other ones are trying to push a new prime minister forward, they can't do without new Komeito, because they won't have a majority, and that, as you say, I mean, no matter how we turn it, for the yen, there could be this short-term reaction if Takaichi doesn't get it, because the market, as we know, has been trading extended fiscal looseness, looseness, right?
Yeah.
And therefore selling the yen. But none of those parties can actually, even three of them together, can actually get an outright majority. So whatever happens, it's still going to be a mess over there. Just as a reminder for people who were maybe not yet in the market, just before Abe and over the big quake, we had a stint of DPJ in those days with Prime Minister Noda, and that didn't go extremely well either in the diet and everything. So I'm not sure that the outcome will be a long-lasting yen strength. So before things will settle, before we know exactly what the opponents trying to put forward a prime minister are going to decide, it's all still up in the air. And I would, as you say as well, I would be very careful with any long-lasting strength. Of course, the rest of the market is still trading a bit risk negative. Commodities are coming off, which in theory should be also good for the yen. But for now, it's clear that the political climate over there is overshadowing all the rest.
So let me ask one question then. If all these parties get together, let's say Komeito, CDP, DPP, Ishin, all these parties, would they only agree on a coalition if they're aligned on policy, or would they get the coalition, get in power, and then have a big bum fight over policy?
Plan B, I think, because there is a lot. There is a lot of the differences, especially if you start to talk about right wingers in there. If there are any, the Innovation Party perhaps, and it's all going to, because they have like this kind of program as well, anti-tourism and anti-migrants and etc. So I still think that there's, unless they do it within, what is it, 1 week now, getting all on the same line, there will be differences, because that's one of the reasons why LDP. Well, Abe was a strong guy, right? So he could rally a lot of people around him, but the opposition has always been very fragmented, and they could agree upon one general line, but that one general line is still going to be supportive for the Japanese economy. So when we think about policies, yes, there will be a reaction, because it might not be that loose, and we know also in the other parties they were more supportive of Bank of Japan rate hikes, but it is Japan, and if they are going to come up with a program, I think we can be sure that there's going to be a lot of support for the Japanese economy. I don't think for a second that there won't be any extra budgets, etc. anymore, because they can't do without. demographics are such that they can't do without.
Yeah, no, I agree with that. And I'm just looking from the aspect if they all agree on policies before making a coalition, that might calm the market a bit because then we've got a stable government. But if we're going into a coalition government where they're all fighting each other, that's instability. Market doesn't like that, and that would have an adverse reaction. But
and also, what is the prime minister going to be able to decide on if they rally behind Tamaki? Let's not forget that's only the fourth party also in size, and will be below the number of votes for LDP and what's the other one?
CDP,
CDP, yeah, CDP, yeah.
Yeah, so that's again, that's the other fight. Who becomes PM of a coalition? That's another argument to have. So this is one of those situations. There's so many possibilities. You can't really turn around and say, "Well, Yen's going to do this, Yen's going to do that." But as I say, on balance, pretty much there's 50 pathways to Yen weakness and probably 2 to Yen strength. So just keep that bias in the back of your mind. Right, let's move away from Japan for a bit. The RBA had their minutes out, not much that we didn't already know. The board will remain cautious and data dependent amid all the global uncertainty, so nothing much out of that. BOE's Green said that she has concerns that this inflationary process might be slowing and that inflation and wage growth is stronger too. Activity is stronger than thought a year ago. Says there's a case for higher for longer rates and skipping cuts, but says rates are probably still on the downward path and that we see a fairly moderate recovery in consumption. That's as of now. We'll wait and see what happens in the next retail sales after the wonderful summer. Speaking of wages, we had jobs numbers out. Let's get them up there, and it wasn't bad. It wasn't good, but it wasn't bad. We saw the unemployment rate. Excuse me. We saw the unemployment rate ticking up to 4.8% from 4.7%. Claims were higher, 25.8 thousand versus 10.3 expected. We also saw the 3-month employment change coming in up 91,000 versus 125 expected. That was down from the 232k last month. On the wages front, yes, a little bit of relief for the Bank of England. Earnings ex bonus came in a pip lower at 4.7%, though including bonuses, they rose 2 pips to 5%. Now, within the ex-bonus number, we finally saw the public sector pay deals that dropped in August coming into these numbers as well. That saw public sector pay jump from 5.6 to 6%. On the private sector, though, it went the other way. We got 4.4% from 4.7%, so a bit of a steeper decline in private sector wages. We might get a bit of a washout next month, which will then the BOE will be looking at, because we could see wages just dipping a bit as those numbers wash out, but that's for next month. But as I say, overall, not good, but it wasn't horrendously awful. A bit like the US, it's not falling off a cliff yet, though it is looking weaker. Over in Germany, the run of crappiness continues. We had the zoo economic sentiment data out. Current conditions were expected to improve to a less crappy 75. They got worse, falling to -80. Expectations as well actually went up a couple of pips, but it was expected to go up more to 41.2, so it missed on that, but did go up too. But overall, things in Germany are not improving. That is a pretty hefty negative number there for current conditions. Over to France and the politics there. Old PM Le Cornu, dropped 2 draft budgets on the table. I don't know if he hid them under a cloth and asked people to pick one or put them in a lucky dip. Who knows? But they're arguing over that at the moment. that's all still going through. There's all concessions being asked for, made, or whatever. That's all up in the air. Whether that government lasts the end of the week remains to be seen. But the pressure remains on Macron to get something done, particularly to get a budget on the table, agreed by everyone else, and able to pass through Parliament. There are still parties playing hardball. They probably won't vote for Macron if he offered them a gold bar. That's the situation we're in. So that stalemate continues, and it keeps putting pressure on Macron, who may have to call an election at some point. But yeah, the end of the year is the real deadline for the budget, but I doubt we're going to get that far before something happens. Over in the US, over at the Fed, we've got Fed's Paulson, doesn't speak often, but she decided to utter forth yesterday, favours a gradual path of cuts over this year into next. It says the jobs market is currently near full employment, but the trend is going the wrong way. It says gradual cuts should keep the jobs market close to full employment. It says the Fed has great sources of information, even with the government shutdown. So she's in favour of looking at the other data to make policy moves. Treasury Secretary Bessent talking about China. Says he believes China is open to discussion on all this. If not, we have substantial levers we can pull. We could move more aggressively than China has. Says that everything is on the table, but he's confident that this can be de-escalated and that Trump is on track to meet Xi in Korea. Now, China has come out a bit tougher overnight. Apparently, according to the Washington Post, it vows to retaliate if Trump makes good on his 100% tariff threat. They've also began special port fees for ships, although this doesn't become effective, or it's effective from April 17th. So I don't know if this is backdated. I assume this is backdated rather than forward dated to next April. Also, the Chinese Commerce Ministry says that the US cannot seek talks while threatening new restrictions, but it affirms ongoing communication under the trade consultation mechanism and confirms that there were working level talks held yesterday. So again, this is still all up in the air. Kate, all this China stuff, it was a bit out the blue from China, and then it was certainly out the blue Trump's retaliation. Where are we headed with this? Is it going to get worse before it gets better, or is this just all chest beating?
When is that meeting that they are supposed to have?
I think it's first week in November, off the top of my head.
Their meeting. I think there's going to be more chest beating until then, and then is going to be the real crunch point. And actually making even the decision whether they meet or not. If it would come to the worst case that they actually don't even meet, then I guess it's going to go. Yeah. Then we are really building up walls, and then I think it's going to become really messy. That is I think where we're heading. So there's 2 more weeks of chest beating, I think. We know that at least Trump would be. He's playing very, very hard ball, but he also knows that the company still need, in one way or another, still need some imports through which channel they're coming is actually not that important, perhaps, but they still need some of those products. So I think it's going to come to that's going to be the crunch point when everything is going to be decided for the better or the worse. And the worst is where we stand now. Very possible because China finds, or they think at least themselves to be in a position of strength, and they are not completely wrong. Although they are going to have to need the rest of the world to export to as well. And I don't think that Russia alone or a couple of more countries are going to be enough. They need the bigger markets as well. So yeah, I think it's not completely dead, but yeah, I think we will have 2 more weeks of chest beating.
Yeah, I've just checked actually. I was wrong. It's the meeting in this shindig in Korea is 29th, 30th of October.
Well,
So
yeah, that's
right on the end of the month, right on the deadline, right on the Fed as well. So yeah, that's going to be a spicy week.
yay, can't wait.
Yeah, I might book it off. It's my birthday on the 28th, so I might take a birthday
Yeah,
holiday. Leave you to it.
might as well start Halloween early.
Yeah, exactly. Right. Some possible good news. Amazon are looking to hire around 250,000 people for this holiday season. So we've got the startup. It might be coming a little bit later than it has in other years. That was something that was noted in the ADP reports that we should have started to see some decent holiday hiring expectations dropping in, but that may happen. A lot of these holiday hires will be seasonal, so they'll be temporary. It can give a small positive boost, but then obviously then that washes out once we've pretty much gone over Christmas and whatnot. But anyway, Amazon hiring 250,000 people supposedly. And finally, I don't know why this was making the headlines, but I saw it everywhere when it came out yesterday. All the wires had it, and everyone reposting it and everything. That Taylor Swift announced the new programming for Disney Plus for December. I mean, I don't know what that's all about and why it hits the mainline wires, but there we go. That popped up and made me laugh. Right, that's it on the headline front. Kay, you got anything else?
No, mate. No,
Good.
good.
Always like it when that happens. Right, where should we start first? Well, I'm on $MEX, so I might as well start there. This is looking like we've got a potential breakout now. We've had these few attempts which have failed pretty swiftly, but this last one, the dip didn't get very far. And I said last week maybe this egg's been cracked, and that it'll make it easier to go for a wander up. It looks like we're doing that at the moment. We're just seeing a bit of support building at some of these broken levels. We tried this before around this 54, 55, 58 area. Hold support, then make a break, build on it, but couldn't manage it. This is looking a bit similar. So we're up above this 54, 55 level, trying to have a go at staying above this 57, 58 level. If we can manage that, then we are probably on for a bit of a break. Now, I think a lot of this is based on what's going on with all this trade stuff and what it means. Is Trump going to go hard on some of the other countries? So this doesn't look like anything to do with Mexican fundamentals or anything. And we've got the USMCA still in the mix. Dollar CAD's moving in a similar fashion as well. So I'm not 100% convinced we've broken out, but the price action is suggesting we've broken out. And if that's the case, we want to see 1850 holding. If I see that, I might go for a separate long. I'm still short from way above, which I won't worry about until we get to 19s. But I might try a little scalp long if we test down to that 1850 and hold it, because that will confirm that we've got a bit of a breakout going. Where it goes from there is anyone's guess. We've got all these old levels up here, all the way up to the 1880s. 19 is really the big one. If we're getting up there, then maybe we are turning around the trend. But then context as always, the 38.2 of, let's get it out there. The 38.2 of this whole move from those highs isn't until way up here in the 1930s. So we've got a long way to go before we start turning this trend around. We've started doing it in dollar CAD, similar picture, year's trend. We've broken the 38.2. We might be heading off to the 50. So it shows you that something has, well, we knew something had changed in this one just from the prior price action, but this confirms it. Getting through the 38.2 shows that maybe we're turning this trend around. So this one's on its climb towards 141. Got a bit of traffic in that area, but the bigger level isn't going to be up until the 50 of this year's move, 141.66. Also a bit of a level around 54. A bit of historical price action there as well. So a bit like the 38.2, there was a level in there also. There's a level in here also. It was naturally there before the fibs were drawn. So pay attention to that. This one continuing On the move up, I have a quick look at dollar yen, because as we were talking about a lot in the chat room this morning, where this one could be going. So as mentioned, we've still got plenty of volatility in this, but it stopped moon shooting higher. So that will be one less thing to worry about for the Ministry of Finance. But it feels like we are just swinging from headline to headline and not really knowing where to go in the market. Like us, is just waiting to see what happens from all this politics in Japan. But remember, that happens in Japan. We are now, 7 o'clock in Tokyo. We will start to switch into the dollar side of things. So this one is important what happens in Asia, and then it switches into what's important when we get into the US session. Bond markets are going to be open again in the US, full day. Everyone's back from the half holiday or whatever yesterday. So we'll get maybe a bit more of reaction to what's going on to all this news. Kay, what's your thoughts on the yen at the moment?
Yeah, well, still the same. Hard to be long yen for longer. We see the reaction we've seen at the end of last week. That reaction when Takeichi started to be a bit wobbly. Her potential to become prime minister again. Market reacts to it, and then does what it does before, what it did before, and that is weigh on the yen. And also, as you rightfully say, the dollar side of things, it does look now that the dollar. The market has rather in doubt. You continue to buy those metals and the dollar. That's where we are at now. I'm not sure that it's going to last for long, but it's a bit dangerous to stand in front of it. So you look at the dollar yen, but you can actually look at a lot of dollar pairs now, right? You've had the Aussie dollar finally giving in to those pressures, commodities coming off, and sterling this morning got a whack on just lukewarm on a lukewarm report, nothing to really, I mean, panic about. But then even euro sterling shot up 40 pips. So and cable got hammered. So it does look like, when in doubt, the market is finding a bit of refuge in the dollar. So yeah, globally the dollar is and that's helping not the yen then, of course. Yeah, yeah, you're right there on the euro sterling. It still needs to break above that 87.20, but I found it quite potentially significant to bounce from that 86.70 and below zone. I've actually bought like really small, missed maybe twice buying in that zone there below, but it does seem that sterling is starting to feel the heat again, right?
Yeah. I mean, well, yesterday it wasn't looking so hot after
Mm.
finding at that 87.20 again, but it's hit it on the nose. I think we're probably setting up a bit of a tight range maybe
Mm.
until we get closer to that budget. But yeah, if we get this type of move again where it starts holding above there, we should at least be going for a look at those prior highs at the very least. But yeah, this one's a bit up and down at the moment.
Yeah.
I'll wait and see if we get any bigger dips down towards the 86 to add back in. I'm not too keen on messing around in the middle. I got caught with that the last time we were up here when he did all that move down. So yeah, I'm going to be sitting up waiting a bit for this one. Right, Matt, I'm going to punch it over to you for a couple.
Yeah, just a few since I'm just back. I'm not going to dive too deep into stuff, but as I was saying earlier, it does look like the dollar side of things now is catching a bit of a risk of tone, right? Had this bounce in the euro dollar, which was last week, then coming off today. We already capped around that 61.8 here, 115.90, and we're back close to that last week's low. Now we, as Ryan was saying, get into that US session, see what the US market wants to do with their own currency, but I would not rule out a bit of a look here down to that 115, maybe figure 10 zone, it is possible for as long as we stay below that 115.95. Get back above there, it can get interesting again to the top side. But for the time being, and just as we are on the show right now, the dollar is catching a bit of a bid again. Dollar yen and cable also getting hammered, and cable is the other one which I found interesting. Sitting back down today, we had this break of that 133.65, 133.90 above there, but especially that 133.60.65. That's I've been watching all the time, as you know. So we had the break, we moved down, went back up and confirmed it at the end of last week, start of this week, as a pretty decent resistance now around that 133.65, yeah. And now we are back testing the Friday lows already, which is a bit of a support of its own. So that's also telling us that the dollar is not only the other side of the pairs, but the dollar is finding some support. We are seeing it in euro dollar, we see cable, dollar yen, and then also on the Aussie. So here I would not rule out for a bit of a test, depending on what again what the US wants to do with it today. But maybe down to 132, and then of course if we would see for the rest of the week more dollar purchases, this 130, 140, 45 should be very important. This is how it looks right now, a bit fragile, same as the euro dollar, bit fragile. Okay, we will see what the US wants to do with it. But to reverse the whole thing and calling this still just a correction of what we have been doing since the start of the year, which it's still very, very possible. We have to get back above 133.65, 133.90. If we get back above there, I think we will have seen the major part of the correction in dollar, and it will have been a correction, and we should start to move back up, but respect those levels. Same as that euro dollar level above 115.95, and then up into the 116.30s, 116.55. The other one, as I said, Aussie finally. I thought last week that the Aussie, until last week, I thought really that the Aussie would do better, but then we had like successive headlines on trade between China, and then we had and the US, then we had commodity currencies falling out of bed, and finally the Aussie gave in, and we are on a bit of support here around 64.5. We're trading right on there right now, and there's a bit more here around 64.15. Unless we get better news and unless we get a bit of a reversal in commodity currencies, it is possible that we are going for a retest of that lower end here, I think 64.15. And then we will see what happens if we get down there, if we have enough, if there is enough demand in the dollar to stretch it down to even 63.5. We will see about that. A lot will depend, again, what the US wants to do with it when they walk in. But for the time being, looking around the whole spectrum, it looks like risk is fragile, commodity currencies down, and Aussie down as well. Kiwi no exception, that's even broken below. And then I just want to close here for today. Have a quick look at what's happening on the metals. It's a mess in silver. When you're having $3 $3 up and down in 24 hours, it's really a mess. A lot to do with those supply issues, etc. Just watch for when there might be coming an end to it, because if it's only to do with supply, once those people will have everything that they need, maybe we'll see a big setback. For the time being, don't fight it, but beware if we start to get below 49.80, 50, the figure, if ever that would happen. Okay. In the meantime, yeah, watch 53 again, and then maybe 54.5 on silver. Gold a bit in similar scenario, yes and no. Because if you say that all those headlines still dropping, etc., on trade, those reasons for having gold and buying gold are still are still very much valid. But I would say where it could get similar is that all of a sudden demand dries up and we get a big setback. Now, nothing bearish on this unless we start to get back below 40 and a half, 4,050. That is an even 39.90s, 39.80s, those prior lows here. We have seen those kind of moves in the past. Look at this one, and then see a fierce bounce afterwards. But I would say, I know, I mean, all the banks are now calling for 4,900, 5,000. It may not go just a one-way ticket. Just keep an eye on what the US wants to do with it, okay? If they continue to buy, then of course, I mean, no reason to stand in front of this train. But I wouldn't rule out a bit more of this kind of action where we see pretty steep setbacks, especially if you see more dollar demand in the FX pairs, for instance. Okay, but yeah, I mean, overall, still nothing changed. Of course, these could be violent setbacks, but still only setbacks. Okay, Ryan, I'm going to leave it here for today. Back over to you, mate.
Thank you very much, mate. Yeah, we'll call that a session for today. Haven't got an awful lot on the cards data-wise, so we'll just keep an eye on all those headlines going on. Welcome back, mate, and thank you everyone for coming to the Flow Show. Have a great day all, and we'll catch you later.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.